Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day guys, Liam Garman here, editor of SPI and co-host of the Smart Property Investment Show. And in this episode, we have a very exciting guest, Natalia Clack, director of Easy Super, who's going to be unpacking how you can buy property through your SMSF. Welcome to the podcast, Natalia.
Hi, Liam. Thank you very much for inviting me here.
And look, I'm very excited to have you in the studio because it ties into what I'm looking to do at the moment as well. And I know a lot of our listeners are looking to do, which is investing in SMSF and unpacking some of the foundations and some of the fundamentals in that. And of course, we've had the disclosure. This isn't financial advice. We're just looking into the world of SMSF. To start us off, Natalia, I was looking at your website. You've got more awards than people can count. I've seen the seals everywhere. Give us a little bit of insight into Easy Super and some of the work that you do with your clients.
Easy Super was founded by myself 12 years ago, and we focus on self-managed superannuation funds only. So we do accounting, we do consulting, and we also provide the audit services. I guess what's different about Easy Super that, first of all, we focus on SMSFs only. We are pure SMSF specialists. We know everything about SMSFs. And the second is that we are big on education. Education the clients and explaining the rules, the complex rules in a simple language.
And it is a pretty complex environment for people to get their head around, which is why we have podcasts like this. To start us off, we'll keep it super easy. What is an SMSF?
SMSF is a trust. It's a special superannuation trust. It's different from the family trust. And in SMSF, every trustee is also a member of a self-managed superannuation fund. And every trustee is a beneficiary of SMSF. So basically, it's a vehicle. SMSF is a vehicle where trustees manage their own superannuation. They invest the money.
And why should more investors be looking to set up or engage with an SMSF?
I think the main 3 points why people want to set up SMSF, first is a control. Everyone likes to have a control, especially over their money. It's not their money yet, but it's a future money for their retirement. And people like having control over their future money. The second is the choice of the investments. For example, you can invest in asset classes such as a property or gold or cryptocurrency. You can invest in SMSF, but you cannot invest in these asset classes in the industry or retail superannuation fund. And the third reason is taxation. It's the most tax concessional environment in Australia. You pay maximum 15% tax. After 12 months, capital gain tax become 10%. You can't get any better anywhere else apart from if you go to Dubai.
I mean, that's a very fair way of putting it. Speaking to a lot of people about SMSF, there seems to be some misconceptions. What are some of the most common misconceptions that you've seen, that you've worked with people on, investors regarding their SMSFs, and how do you go about addressing them?
SMSF is a complex structure, and a lot of people think, it's too hard. And they put it in too hard basket, and they sit and wait for years until they realize that their superannuation is not going anywhere. Because a lot of people are not satisfied with 5 to 7% return in the industry or retail superannuation fund. However, if you engage the right specialist, SMSF is not that complex. The rules could be explained to you, and once you know the rule, it becomes simple. It becomes simple to manage, and the only thing you have to think about is, where do I want to invest? And then ask the specialist the questions. I want to invest in such and such asset. How do I do that? That's simple as that.
So how do you go about taking your clients on that journey? Because it is challenging, there are those rules in the way. And a lot of investors, including myself, look at it like it is quite complex. You say it's not that hard when you go through the basics. How do you go about taking your clients on that journey to say, hey, it's not that hard, this is what we can do for you?
We make things differently compared to what our accountants and providers out there are doing. We are big on education. What it means, if someone comes to us and asks, I want to set up a SMSF, we are not only setting up SMSF for them, but we also provide with education. The education is in the way of the workshops where we sit down with a group of people and we explain what the rules are, what people can do with their superannuation, how they can do it so they stay compliant. We do not provide any investment advice. We never tell people where to invest, and it's very important to understand because, again, we want to provide with the knowledge, and knowledge is a power. And once you have the knowledge, you can be empowered with the right decision. So you can make a decision yourself about your investments, but we make sure that you stay compliant. We make sure that you sleep at night and know that whatever you're doing in your SMSF with your superannuation is compliant, and the auditor will be happy about your superannuation fund.
I'd love to go through a bit of a day in the life of an investor who is investing in their SMSF or buying a property through their SMSF. For people that are listening to this at home, a lot of people haven't yet taken that journey but might be interested. Say they come to an accountant or to yourself looking to buy an investment property through their SMSF. Where do they start? What's that journey? What's the process that someone can take to buy a property through their SMSF?
People can do a few things to start their journey. First of all, they can engage a financial advisor, of course, because SMSF is a financial product, and every financial advisor will be able to provide advice on SMSF establishment. Also, they can go to their accountant or the providers, such as Easy Super, for example, and ask us to set up SMSF for them. Again, the biggest and most important part of this journey is understanding the rules. People need to understand what they're getting themselves into. SMSF is not for everyone. And before, jumping into anything, especially investing in property, which we know it's a very serious investment decision, you need to understand the rules. So this is where you start. Doesn't matter if you go to financial advisor, if you go to your accountant, if you go to any online provider, find this education piece either online via podcasts or videos, or go on your website. Even if you go on your website, there are videos about how to run your own SMSF there and start your journey with education. It's very important.
What are some of those rules that you touch on? I understand that there are rules in terms of not being able to access it until, I think, 55. Can you give us some of the broad insights of some of the restrictions but benefits that SMSF follows?
First of all, you cannot access your superannuation until you're at least 60,
At
not
60?
55.
I
Yes.
Googled it. I thought it was 55.
No,
Okay.
no, it's a long way to go for you, but you have to wait until 60. It used to be 55 though,
Yep.
so probably you ask ChatGPT, and it's a
Gemini, yeah.
a broken ChatGPT or broken Gemini. Sometimes they're hallucinating, and this is one of the cases where I said you need to find the provider, you need to find the advisor or accountant who can educate you, because asking ChatGPT, it's not the way to go.
See, that's such a great example, isn't it?
It
'Cause
is a great example.
this was only about I might have even mentioned on a podcast, maybe. It was about 2 or 3 weeks ago that I Googled it, and I said, what's the earliest that you can access it? And you know how on Google you've got the Gemini kind of summary of everything that comes up, and it said 55 up there. So, they must be pulling from pretty old data. So it is 60 now. What are some of the other kind of rules, restrictions around property investing in the SMSF?
With the property, you can buy property and borrow. This is one of the greatest advantages of using your self-managed superannuation fund to invest in property, because you can leverage. But also there are restrictions. Restrictions such as you cannot borrow from SMSF. So, for example, once you have SMSF, it means that all your superannuation money should be invested. You cannot borrow from SMSF if you're short on paying your bill, or if you need $1,000 because again you're waiting for the paycheck, you cannot borrow from SMSF. It will be breach. So you can't touch this money until you're 60. This is one of the main rules. The second main rule, which a lot of people breach is mixing your own money and SMSF's money. And this is the other thing. People log in and try to pay their bills again. They mix up their bank accounts and transfer money instead of transferring from their personal account. They transfer from SMSF account. You'll be surprised how many cases like that we are seeing, when we're preparing the financials and tax returns. So there are rules, strict rules around superannuation, and everything what you do in a self-managed superannuation fund has to be at arm's length. It means if you buy the property, you cannot live in it. And your relatives, your siblings, your parents, your children cannot live in it. Even if they pay you their market rent, they cannot live in it. You cannot buy a holiday house and try to pretend that this is an investment property and go on holidays every Christmas and use it for your enjoyment. So basically, you cannot use superannuation again until you retire. That's one of the main rules, and these rules are most commonly breached according to the ATO statistics.
It seems like there is a risk of simple mistakes that can happen, especially when you were talking about reconciling a bill or paying off a bill and accidentally transferring it from the wrong account. It seems like there's some easy mistakes that could be made. Diving into the opposite, there are huge benefits. You highlighted them a little bit before, including the tax benefits of SMSF investing. Can you take us through that in a little bit more depth?
Absolutely. So first of all, SMSF pays 15% tax maximum. So it means that if you have the income such as the rent, for example, from the property, if you have rent coming in, you're only paying 15% tax, which is great. In terms of the capital gain tax, you're paying 15% tax in the first 12 months. So if you buy property and sell it in the first 12 months, I don't know why someone would do that, but just assume you pay 15% capital gain tax. If you hold the property for more than 12 months, you pay 10% capital gain tax. So it's very, very concessional tax environment, but it gets better when you get older. And older, I mean 60, not 55. So when you get 60, potentially you can move to the zero tax environment. So you have to reach the age of 60, and you have to quit your employment. Say, for example, you stay working for Momentum, and you reach the age of 60. And you quit because you say, you know what, I had enough. You can access your superannuation and your accountant can move you to the tax-free environment. So the property which you buy today, hold it until you're 60, quit your employment, and sell it after, you pay zero capital gain tax.
Wow. So it would be treated, and I might get this wrong or might oversimplify it, it'll be treated in the same way as an owner-occupier in the sense that you don't have to pay capital gains tax on selling it?
Not exactly like that. It's a different concession. It's about moving from tax environment to zero tax environment if you meet the certain conditions. And certain conditions, reaching the age of 60 and quitting employment, or reaching the age of 65. If you reach the age of 65, you don't have to quit anything. You can keep working. And at the same time, we can move you to zero tax environment. But there are limits to it. Yep. So I have to admit there are limits, of course, because the government doesn't want people with rich people to put millions, tens of millions of dollars in super and have these concessions. So the limit is $2 million per person at the moment, but it gets indexed. So at the moment, say between you and your wife, you can have $4 million in super in tax-free environment, but only if you're over 60 and if you quit your employment, or you're over 65.
Yeah, right. Wow. So potentially you could have, if you did invest in multiple properties through your SMSF, you could have potentially multiple properties up until that threshold.
Yes.
Up until that threshold, which you could sell all of them and pay 0% capital gains.
Yeah, absolutely. But, like even above this threshold, you're still paying 10% tax, capital gain tax after 12 months. So you're still paying 10%, which is very, very, again, it's nothing.
Minor. Yeah, it's a lot minor.
Compared to our taxes outside of SMSF, which could be like 45%, it's not much.
So I've got a very random question. And this might come from a little bit outside the box, but I think it's something that a lot of our listeners it'd be in the back of their minds at the moment. Now, I'm not an expert in this area, so I'd love to get your insights into this. There was a lot of discussion around the new government policies. I think it was around the $3 million in the super and the tax. How does that tie into this?
It's actually a good question. It's not a random question. It's definitely SMSF related question. Division 296, it is a new proposed tax on taxation of capital gains for the balances above 3 million. However, first of all, I think, it was a lot of pushback from the different accounting bodies and different groups. And I think government now revisiting this legislation, and it's not going to be how it was proposed as a $3 million cap. So tax. So what it meant, if you have a balance which is above 3 million, you'll be paying unrealized capital gain tax on the difference between 3 million and whatever capital gain would SMSF make in a year, which was very unfair because, first of all, you're paying tax on unrealized capital gain. So you have not made the money yet. And when you sell, say, for example, the property goes up, you pay unrealized capital gain tax, and then for some reason it goes down. Could it happen? Of course it could. And you sell it when it's on the bottom. Guess what? You're not getting a refund.
You don't
from
get
the
the money
government.
back. So
No.
so I'm making it really simple. If it goes up from 100,000 to 200,000, you'd be paying over the year. You'd be paying 10% on that 100,000, and then if it goes to 99, you just paid $10,000. Just tough.
You're paying 15% to begin
15.
with. Yeah.
Yep.
And
because it'd be within the first year.
No, because if you have a balance above 3 million only.
Yep.
So you're paying tax on a
of
balance above 3 million, not before 3 million. But say, for example, if on the 1st of June 2025, your superannuation balance is 3,100,000, and on the 1st of June 2026, it's say 4 million. So you pay tax on the difference, which is 900,000. You pay 15% tax on it.
Wow.
But say next year your property goes down for again whichever reason, and your balance is back to 2 million. You're not getting a refund from the government.
That's wild.
So that's, which is why it was a lot of pushbacks from, like I said, different bodies, accounting bodies were very against this proposed tax. SMSF Association was lobbying against this tax. Like all the specialists, like I'm against this tax personally, of course. So, and a lot of people don't understand that it's not taxation on rich only. By the time someone who is like, say, in their 30s, by the time they retire, say they reach the age of 60, they might have a way above $3 million. So it means that they will be subject to this tax. Not only wealthy, how government talks about it. So it will affect more than 80,000 Australians, like they mentioned in the beginning. It will affect I think almost every like young person.
Of course, if you're saving, if you get into the workforce at 16, 17, you've got potentially 50 years of super.
Exactly.
And it's not unrealistic over 50 years of super. What is it at the moment? 12%? 12% over 50 years, half a century. It is very realistic to say that you could be over $3 million, especially depending on how you're investing. One reason that I'm very interested in SMSF, and it's funny. I was what was I doing? I had to give my broker some information. I think I had to give my broker my superannuation, and it's gone backwards because I went into the most aggressive portfolio. I took the advice, not financial advice. I studied economics at uni, and what the lecturers always said is, when you've got these long-term these long-term plans like super, go as aggressive as possible because the market will even itself out, and then in half a century when you're able to access it, it will have accumulated. So you've got the time to be aggressive, and if it goes south, you're young enough that you can make it back. And I looked at my super, and this was probably only 6 months ago. And I was gobsmacked about how small it was. Oh my gosh, it's gone backwards so far. And I was looking, I did a back of back of envelope calculations about how much I would have contributed. I'm like, why is it so much less than what I've put into it? So the idea of investing in SMSF and having the ability to have a little bit more control over where you're investing and what asset class you're going into, I think is very useful and something that a lot of Australians should be considering. Before we go more into that, are there any other trends or regulatory changes that might be on the horizon that investors should know about?
Not at the moment. Division 296 was a big one. Everyone was talking about it. All the media were talking about it. And the focus was on this. And now we don't have anything like that coming, hopefully.
What's one bit of advice that you can offer to investors who are starting their SMSF journey to ensure that they're set up for long-term success?
Again, you have to start this journey prepared. First of all, education, like I already mentioned. The second, you have to have a clear understanding of what you want to do with your money. So you can invest yourself. You can definitely pick and choose your investments.
Oh, that's right.
Sorry, it's just... Oh my God, something good.
No, it's all right.
I have to redo this one. Oh, I don't know what it is.
Oh, it's all right. Probably just the heat, the dry room. Yeah.
All right, let's start. Okay.
So on that note, what's one bit of advice that you can offer investors who are starting their SMSF journey so they're set up for long-term success?
All right, a couple of things you need to understand. First of all is you have to start prepared, which is education, knowing the rules. And the second, understanding the responsibilities as a trustee for SMSF. And also understanding where you want to invest your superannuation. With the investment side, you can do it yourself. So literally, you can invest in, say, for example, you want to invest in shares. You can open an account with any share trading platform under SMSF name and invest in shares which you believe in. Simple like that. Or you can engage a specialist. Again, for example, when we're talking about property, of course you can do your own research. Of course you can spend hours and hours doing your own research. But at the same time, you can engage a specialist, which is a buyer's agent, and their fees will be deductible in the self-managed superannuation fund, which is a great thing. The fees will be paid from SMSF and they will be deductible. So I think it gives you flexibility to, again, think, do I want to do it myself? Do I have enough financial knowledge and expertise in this particular topic, say property investment, to do it myself? Or do I need to engage a specialist? And again, it gives you freedom of choice, but you do have to have understanding what you want to do with your money. You don't go to your accountant and say, I've got this superannuation, but I don't know what to do. So get yourself educated, listen to the podcast like this one, and make sure that you have a clear idea of what you want to do, and then find the right specialist. Right specialist for SMSF establishment, right specialist for investment. Like I said, if it's a shares, it's a financial advisor. If it's a property, it's a buyer's agent or buyer's advocate. if it's a crypto, again, like listen your own podcast, whichever podcast you want to listen. There are a lot of crypto educators. If it's a gold, silver, again, educate yourself on what the precious metals are, why they're going up or why they're dropping. So you need to have this understanding of the financial investment rule and no financial investment rules.
What's one area of education that you think a lot of people should be upskilling themselves on? Obviously, one of the key differences of Easy Super that we've highlighted is the education, the support that you offer your clients. When you're speaking to your clients, is there a really common thing that a lot of people just they get wrong so often that they should be looking to upskill themselves on?
Yeah, absolutely. I think one of the main mistakes, excuse me, I've been seeing with the people or observing with people is not engaging the specialists and trying to put it in too hard basket. So I do get a lot of very intelligent, educated people, but because they're time poor and they just don't have time to educate themselves. They don't do anything about their superannuation, and they've got decent balances which could make a difference for their retirement. But because they're time poor, they think it's too complex, they do nothing. And I think this is one of the mistakes where they don't take responsibility for their own future, and they don't take this opportunity of money sitting there and very often doing 5-7% or even going backwards, like in your case. And just wasting time, to be honest, because, like in terms of the investments, time is money. And, like the longer you hold on to property, the potentially more money you make.
Yeah.
That's exactly the same with superannuation. The longer you invest it yourself and look after your superannuation yourself and invest in the right assets, potentially the more you can make for your retirement.
You also mentioned something before, which I think a lot of our listeners, their ears would have peeked at it, was that buyer's agent fees can be deductible from your SMSF. So my understanding is buyer's agent fees for, if you were to use a buyer's agent for your, like an investment property or a PPL, well, let's say investment property, that would not be tax deductible, but it is for an SMSF.
It's not a tax deductible as an expense, but it goes on a capital base of the property. So eventually it means you will pay less capital gain tax because of these fees.
See, that's a fantastic thing. I don't think many people knew that.
Yeah, it gets capitalized,
Yeah. And the other question, just from what you were saying before, is, it can be simple. If you were to engage specialists, if you engage people that work in this space, there are ways that you can more simply take control of your future in that sense. If we take the example of share trading, where you can set up on a share platform something under your SMSF trust, and everything goes through there, it almost seems this is where a lot of people might get in trouble because it's almost too simple and people make simple mistakes. What's the auditing process look like so the government makes sure that you're not misusing the money?
Oh, yeah, absolutely, because SMSF has to lodge a tax return every year, and it has to be audited by the independent auditor. What it means that an auditor will look at the evidence of the transactions, so everyone has to keep the records. It's very important. And also the auditor will look at the evidence of existence of this asset, say property, and the ownership, because everything has to belong to the SMSF. If you invest superannuation money, you have to invest on the SMSF's name. That's very important. So the auditor will check, the auditor will do the title search, the auditor will check all the transactions, the auditor will check the sale contract, for example, and annual management report as well. So remember that once you buy the property, it's not the end of it. Then you have to find a right manager to manage your property. But saying so, you can manage it yourself if you want to. But usually, again, a lot of people are very time poor and they prefer to find a manager. and manager will produce your report. So it's like I said, it's not that hard if you engage the right specialists to assist you.
Are there any, I mean, I'm sure there are many. What are the substantial differences between an SMSF tax return and a regular income tax return?
First of all, it's not self-assessed because the regular tax return is self-assessed. You go to your accountant and you tell your accountant, you know what, I just made $5,000 last year, and your accountant will put it in a tax return, and that's it. So, and if you don't get audited by the ATO, then technically you can, I wouldn't say lie, but you can, like be a little bit cheeky with your tax return. Hopefully no one does it, but nevertheless, no one checks. And it's not the duty of the accountant to check if you are saying you made 5,000, for example, or you made 10,000. With SMSF, it's different. It's not a self-assessed. As accountant, we prepare the financials, but we also have to prove every single number in the tax return.
Really?
And the auditor has to have a proof, and proof has to be in the way of reporting from the third party, not a self-reporting from the trustee. It has to be reporting from the third party. And very often the auditor will do a comparison sale report, for example. If we have a property and market value is unknown, because one of the main rules in SMSF that the SMSF assets, they have to be valued at market value every year. So it means every year the trustee has to either provide the market valuation report, or the accountant has to somehow find the market valuation report, and again it has to come from the third party, unless there is a evidence or proof of this particular market value. So which could be hard sometimes for the properties if they are if they are commercial properties, because try to compare the commercial property, one commercial property to another, unless it's an office space and they're very similar, it's not always easy. Or if it's a unique property, for example, if it's unique house or unique farm, for example, or unique land. So sometimes it's very hard to find the comparable sales in the area, and it means that the trustee will have to engage the market valuer, and it means there are additional fees which they have to pay for valuation of the property. So there are small things like that, but you need to understand, again, before jumping into something, you need to understand what you are getting yourself into.
Absolutely. That's raised another question, which is the differences between transferring residential and commercial properties into an SMSF. So my understanding is you can't transfer a residential property into an SMSF, but you can transfer a commercial property into an SMSF.
You mean transfer buy from yourself?
Buy from yourself.
Yeah.
Yes, buy from yourself.
Yeah, buy from yourself. Yes, you can buy commercial property from yourself, and it's one of the exemptions. The same like with shares. You can buy shares from yourself. But this is it. In terms of residential property, unfortunately, you cannot transfer residential property, buy it from yourself. I mean, your SMSF cannot buy it from yourself. That's one of the main rules. However, SMSF can sell you the residential property. So if you buy the property and for some reason, say, for example, you want to live in this property, you cannot live in the property while this property is in SMSF. But you can buy this property from SMSF in the future. If sometime, one day you're ready, you've got enough cash, you just buy it from SMSF.
At the market rate.
At the market rate, of course. Yeah, everything has to be at arm's length, market rate. Or the other thing is when you're retired, which is reaching the age of 60 and quitting your employment, potentially you can transfer this property out of SMSF as in specie lump sum payment to yourself. This is something else, people don't understand or don't know, and live in this property.
Yeah, wow.
So potentially you can end up living in the property but only when it's out of a self-managed superannuation fund.
These are fantastic points that I did not know about. These are awesome. Now, what I'm going to do is I can only imagine a lot of our listeners, they're getting a lot of questions. If you're listening to this at home, and if there were any more questions that you want me to ask Natalia for you, send them through to liam.garman@momentummedia.com.au or reach out to Natalia. She's on LinkedIn. Go out to the Easy Super website and you can reach out to her direct if you have any questions. But what I can also do is, because I'm boiling with a lot of questions, if anyone has any questions, send them through and then we can do follow-up chats. With this, though, it goes back to the importance of partnering with the experts and speaking to people like yourself, Natalia, at Easy Super. How do you differentiate yourself at Easy Super from other traditional accountants in the SMSF space?
First of all, we do superannuation only. We don't do anything else. And my mission is to educate Australians about power of superannuation. So I'm very big on education and knowledge. So we know everything about SMSFs. I've been doing it for 22 years, and I think this is what makes us different from general accountants, because this is how I look at it. It's like when you go to the medical center, you have GP or you go to specialist. So we are the specialists. We are like heart surgeons or whatever you call us. So we specialize in SMSFs. We spend a lot of time, me and my team, educating ourselves, keeping our knowledge up to date about everything SMSFs. And therefore, we can assist any type of inquiry, any type of issues if someone has issues, or any type of investment ideas, which you, if you want to run it by us, we can always tell you if you can do it in SMSF, or if you cannot do it in SMSF, and how you can do it.
And I think that is crucially important. That's a crucially important fact that I think a lot of investors in Australia don't think enough about, which is, just when I'm out and about and I speak to investors every day. One thing that I see, and it is a really common mistake that a lot of people have, is they don't speak to accountants that specialize in what they're trying to do, and they're going to the accountant that they've had for 10, 15 years, and they might be very good at lodging an income tax, and they might be fantastic, and they might over-service you. But when it gets into the more complex parts of SMSF, for example, that kind of accountant that you've had for 20 years that doesn't specialize in it, they're not going to cut it, and they're not going to be able to help you. And especially in a market like this where houses are getting, they're getting pretty expensive. You need people that know the rules to support you on this journey.
Yeah, absolutely. And you don't know what you are missing out as well, because if your accountant just does a bookkeeping and lodges your tax return, how do you know which strategies are available out there? How do you know you're not missing out on saving on tax, for example? So that's the other thing. You don't know what you don't know. So I'm not saying that accountants are bad people, or they are not specialists, or they cannot provide with good SMSF advice. I'm just saying that in order to provide deep knowledge SMSF advice, accountant has to spend a lot of time educating and upskilling themselves in this particular area. So that's the only thing I'm saying. So if you've got this type of accountant, that's great. But if you think your accountant is not focusing on SMSFs, because again, a lot of accountants have other things, on their plate, then probably it's time to reach out to the specialist and find out what you're missing out on.
Oh, for sure. I couldn't agree more. Now, before the podcast started, Natalia, you and I were talking about some pretty good growth on your horizon at the moment. What's next? What's your next 12 months look like at Easy Super?
We are growing quite rapidly. And this is because, again, I put myself out there, and with free education, webinars, videos, talking to people, talking on a podcast like this, that podcast, and again, just giving away my knowledge, like 22 years of experience. And we have a lot of new clients coming in, a lot of inquiries. We deal with different specialists, such as an expert, such as a buyer's agents, mortgage brokers, as well as property educators, who again know that we provide the very good service to our clients, and they reach out to us with help with us for assistance with their clients. So I think the next 12 months is going to be very exciting time. I'm more growth, but also I'm planning to bring more to my clients as well, in a way of more podcasts, more webinars with the different specialists from the different areas. Say, for example, if I'm not an expert in, say, wills or estate planning for superannuation, the next webinar for my clients, I'll bring the lawyer, the specialist lawyer specializing in estate planning for SMSFs. And this is how I add value to my existing clients. And this is, again, how I share not only my knowledge, but also other people who I think would be beneficial for my clients. So it's a lot of exciting things coming, but I'm definitely not your typical accountant, and I never intended to be. I just want to be more than just number cruncher sort of life thing.
Oh well, number crunching is still important.
I know it's important, but at the same time, I think. Look, everyone is different. It is important, but I feel like my mission is also education and awareness, and making sure that people have this information and they can take control over their future. They can grow their superannuation. And at the end of the day, the result which I want for people is to end up with more for their retirement. That's end goal for me and for my mission.
Absolutely, and I think the education piece, the awareness piece, it's underpinned by the art of the possible, and so many people would be sitting out there across Australia. And I'm going to guess there's probably a lot of people like myself out there that, when they first got their super and they ticked the most aggressive option, actually might not be doing as well as they thought. There might have been some very conservative people out there that ticked the safest option. They might be checking their super now and seeing, where's the growth. But in their day-to-day lives, they might be, quite savvy investors, and they might be able to do better with their own money, which is why you need to upskill yourself. If any of our listeners do want to get to know more, dial into those live streams, listen to those podcasts, how can they get involved?
You can go to our website, easysuper.au. We have a YouTube channel, or we have an Instagram. My Instagram account, Super with Natalia. And you can listen a lot of free webinars out there, podcasts, and also videos. I do short videos as well, so it's not too boring for people, because SMSF could be quite technical. So I'm trying to squeeze it in 1 minute and just give people the snippet of something important, and reach out for 10-minute consultation and ask me questions about superannuation. Don't ask me where to invest.
Yeah.
We don't provide investment advice. Do your own research.
Yeah.
But if any other questions you would like to ask, and I can cover it in 10 minutes of consultation, then just book a consultation with me.
Ask how, not what. Don't ask what to invest in.
Exactly.
You can ask how to invest. But I think that is all we have time for today. Thank you so much for joining us, Natalia.
Thank you very much for inviting me, Liam.
That was Natalia Clack, Director of Easy Super. And if you want to get involved, get that education, get the awareness of the SMSF space, reach out to Natalia and go to the Easy Super website. They're fantastic people, and they'll be able to support you on your journey. But that is all we have time for today on the Smart Property Investment Show. But until next time, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.